Welcome traders to this video where we're going to be looking at the importance of building confluences. So what we mean by building confluences is actually building up structure of how you're actually going to find a trading opportunity or setup. Now, many traders actually jump into the market without actually thinking about exactly what they're going to be, how they're going to be getting out of the market, the reasons for getting in the market. And really you should be having many reasons for both. The reasons why you should be entering at that point, reasons for why you are targeting a certain destination or key level on the market, on the chart, and then where you're going to be placing your stop loss. So these confluences, we do need to build up as many as we can. Now these confluences can range from key levels, Fibonacci, moving averages, trend lines, head and shoulders patterns. There's many different variations of reasons as to why you think a trade is going to go in a certain direction or to a certain key level. So here we have the Australian dollar chart open. Now I did in fact this chart down towards the end of last week actually, with a nice little profit target down roughly at the 0.7 handle. Now I haven't actually targeting this for quite some time now. Recently, into the start of this week, we have actually pulled down. I've broken down the Australian dollar, US dollar many times before as well, back when we were actually above this key zone at 0.7150. And there's a lot of reason as to why I thought it was going to come to this level. Now, if we look at the confluences, first off, we do need to go on to the higher time frames. If you are looking to, perhaps find any opportunities anywhere from the 4-hour to the 30-minute chart, you can go a little bit lower than that. But I personally trade myself on the monthly, weekly, daily, drop down to the 4-hour, 2-hour, and 1-hour. So on the daily, you can get quite a lot of clarity, especially the weekly as well, in terms of trend. So when we want to actually break down a chart, we want to identify the overall trend. Where is the shift happening? Where's the momentum coming from? So in this case, well, on the weekly, it was in fact a downtrend from the lower low, lower high, lower low. Here we did in fact pull all the way up. Now there was quite a lot of manipulation around this level here. That's why there are quite a few key levels scattered up there. When I was actually breaking down this, we were looking for potential breakout above here. We didn't get it. We did in fact wick and then fall quite sharply, and this heavy momentum towards the downside, the moving average crossover to the downside, and we're back below the 200 daily moving average, is all confluences. Lots of reasons as to why I am sort of stacking the long term on the daily reasoning into a trade potential setup. Now we can see support sort of levels roughly around here, which was the 0.7150, and we can actually drop down a time frame to get a little bit more clarity on lower time frames. So let's have a look at some of the confluences that I was actually stacking up on this trade on the 4-hour. So the 4-hour, we can see a nice gradual downtrend here, which is good to see. Moving averages are in alignment, and also that 200 moving average on the 4-hour. We did see a pullback up into the region of 0.7150. Now we did have this sharp uptrend. Now towards the end of last week, there was a little bit of Australian news that also come out that did shift the market back up slightly. But when we were sitting at this level, overall, if we can try and look for the confluences, well, on a fundamental basis, coming away from the technicals, the dollar is super strong at the moment. Now I'm expecting further increases on the dollar. What does that mean to Australian dollar, US dollar? Well, as it's the second currency in this currency pair, so it's not the base currency, it's actually the cross currency, that means that strength for the dollar is going to pull Australian dollar, US dollar down. And in alignment with this, we've had the moving average crossover on the 4-hour and also the hourly here. Hourly, we did get a shift of the we did get sort of a pull back up into and above the 200 moving average before dipping below, and then finally coming down to our target. Now I did mention in the last trading view post that we there is much more potential towards the downside. 0.7 is actually only first target now to the downside, and we are expecting more downside to come. So now that it's achieved a target, usually I like to actually come out of the trade, unless there's potential for another trade or opportunity to hold the trade longer. In this case, we've got heavy amounts of support, so I am expecting manipulation around these levels. But if we look left, we can actually see next immediate support is probably going to be around 0.6850, which is significant amount of pips there, just down to there, before actually coming a little bit lower, perhaps even to these levels around the 0.660, 0.6650. So there's still a lot of downside momentum to come from this pair. If we actually step back out to the weekly and look for more confluences, if I actually remove some of this mess now on the chart, we can actually use some tools now in order to identify. So if we take this whole movement here, so we've got point A, point B, point C, bang on the 61.8% level, and we do actually have our D extension down here. Now I've actually put a marker in there, so that's roughly at the nice round number of 0.6700. 0.6700 there as a downside target. We do have another confluence. So again, building confluences. So number one, it's a Fibonacci D extension target in my strategy. Number two, it's a prior historical support level here, and we also can see more support there. So number two, it's a historical support level. So if we try and look for a third reasoning, we can actually see that we did in fact have a key level here, roughly at the 0.7200, which is around here. So if I mark that in as a key level here, now if we take that zone there, so this leg, we can actually mark that leg in as a high, and then we can actually place that on the breakout, and we can see that it does actually range quite equally to that as well. So that could be the third confluence for this target. Now usually 3 confluence is more than sufficient enough to actually identify a target. We can then look to go in for 3 confluences to why we should actually enter the market, and then 3 reasons for why we should place a stop loss. But the more that we actually build up these reasons, the more it's going to help our confidence when we're actually going to execute these trades, and then actually see the market go in the direction that we actually want. We did see the Australian dollar recently go in the direction here. We did briefly have a look at gold, euro as well. Euro was very, very good in terms of looking for bearish momentum off the back of, again, the dollar strength. We did see a movement down to the target 1.0500. So yeah, we are seeing lots and lots of dollar strength across the board, which is causing a lot of devastating impacts on some currencies such as the pound, etc. But again, this video is really more about the confluences and the reasoning behind the setups. So the more that we can actually build upon those reasons, those confluences for getting into a trade, when we see those play out and in real time, if you spot an opportunity on the daily or the weekly, it may take a little bit of time to actually fulfill that target. If you're looking for 150 to 200 pips out of a trade and you're risking, let's say, 75 to 100 pips, then you may perhaps need to let it keep the trade open for 3 to 4 days. When you do see that occur and the market does actually come down to your target, that's where you're going to be able to build upon your confidence. And it's really, it's all part of the trading journey. It's about the building blocks of your confidence, building blocks of your ability to actually read the chart, break it down, and get some clarity and insight of exactly where a currency pair is going to be going, at a specific time in the market. But other than that, you just want to make sure that you're building upon the actual reasoning around the trades, rather than just clicking buttons, buy, sell, at a random pace, not knowing exactly where you're getting in, out, getting in, getting out, and not documenting the process along the way. So that's it for this video. Stay tuned for more videos to come, and trade safe.